Hello everyone, welcome back to Nandu's Equity. We are just days closer to the US election and US election results, and today we are going to see how the US election 2024 will impact Indian stock market. The 2024 US presidential election is not only shaping the future of America but also casting ripples across global markets, including India. As Kamala Harris and Donald Trump are going for the presidency, Indian investors are closely watching to see how the election outcome could impact the Indian stock market and key sectors. Historically, US elections have influenced everything from currency fluctuations to investment patterns in emerging markets. With the stake higher than ever, sectors like IT, pharma, energy and defense in India are poised to feel the impact of any shifts in US policies, immigration reforms and international trade relations. US has only two major parties and the focus is always on them, the Democratic Party and Republican Party. Let's have a quick look on both of them first. The Democratic Party, represented in the 2024 election by Kamala Harris, traditionally favors policies that support middle and working class Americans, often advocating for wealth redistribution through progressive taxation, expanded social services, and healthcare reform. Democrats generally prioritize policies to stimulate consumer demand, reduce income inequality, and invest in sectors like education and clean energy. Historically, Democratic administrations have been associated with relatively higher economic growth, with research showing an average GDP increase of 4.86% under Democratic presidents between 1927 and 2015. Past policies under Democratic leaders such as the Affordable Care Act under President Obama focused on broadening access to healthcare, while economic stimulus measures sought to boost employment and consumer spending. With Kamala Harris as the nominee, the party is expected to continue advocating for policies that address climate change, progressive taxation, and expanded labor protections, aiming to foster a more inclusive economy. The Republican Party, represented by Donald Trump in 2024, generally promotes limited government intervention in the economy, favoring lower taxes and deregulation to encourage business investment and growth. Republicans often focus on policies that benefit corporations and high-income earners based on the belief that a stronger corporate sector leads to job creation and economic stability. Under Trump's first term in the past, tax cuts and deregulatory efforts were prioritized, such as the Tax Cuts and Jobs Act of 2017, which significantly reduced corporate tax rates. This approach, while encouraging short-term economic gains and boosting the stock market, also contributed to an increase in the national debt. Republicans typically advocate for a strong national defense and are less focused on social welfare spending, with a stronger emphasis on securing borders and fostering traditional energy sectors like oil and gas. Should Trump win, his administration would likely pursue similar pro-business policies with a focus on tax incentives, reducing federal oversight, and strengthening American manufacturing. As one of the most consequential global events, the 2024 US presidential election has raised expectations of volatility in global markets, including India. With both candidates, Kamala Harris and Donald Trump, expected to pursue different economic policies, Indian investors are preparing for potential changes, especially in sectors closely tied to the US economy. Number one is IT and then energy and defense. Historically, stock markets have shown stronger performance under Democratic presidents with an average 10% annual growth according to long-term research. If Kamala Harris, the Democratic nominee, wins, the pattern could continue, bringing positive sentiment to markets, including Indian IT and export-driven stocks. With major Indian IT companies such as TCS, Infosys, and HCL Technologies relying heavily on US revenue, any policy changes in tariffs, immigration, or outsourcing could impact their margins and growth. Trump's past anti-immigration stance affected these firms, while democratic policies have often allowed smoother operations through more supportive work visa regulations. In the lead up to the election, market analysts expect increased volatility with a market impact on sectors like gold and the US dollar. As investors seek stability, Indian markets may see temporary fluctuations but generally stabilize post-election once the policy direction becomes very clear. Given the US's anti-China stance, particularly from both candidates, defense sector collaborations with India may intensify whoever wins, whether it is Kamala or Trump, potentially boosting stocks tied to the defense production and exports. India's strategic role in the Indo-Pacific is likely to be reinforced, regardless of the winning party, which could improve defense and infrastructure related stock performance. If Trump is re-elected, expectations include lower corporate tax policies, which could fuel investment but also increase volatility, particularly in bond markets. Lower oil prices driven by pro-energy policies may benefit India's import-driven economy, impacting Indian oil, energy and logistics stocks. While the short-term volatility is expected due to election-induced market adjustments, the long-term impact on Indian markets may be limited. Research indicates that while elections cause temporary fluctuations, they do not often shift the long-term growth trajectory of well-established sectors like IT and pharma. The US dollar strengthening in anticipation of election-driven volatility could pressure the Indian rupee, affecting import-heavy industries in India. However, this could benefit Indian exporters like IT and pharma, as a weaker rupee makes Indian goods and services more competitive globally. Trade policies under the next president could impact global oil prices, which are a critical factor for India's economy. Should oil prices remain low, India could benefit from reduced inflationary pressure, positively impacting sectors like transportation and manufacturing. Indian investors are advised to take a balanced approach, focusing on sectors resilient to short-term US policy shifts. Long-term strategies favor industries with steady demand such as IT and pharma, as well as emerging defense and infrastructure opportunities tied to the US-India collaborations. IT is the number one sector which either way will be impacted, and the focus stocks like TCS, Infosys, Wipro, HCL and Tech Mahindra. The Indian IT sector is always heavily dependent on the US market, and most of these companies, major Indian companies, having a major portfolio share in the US market as clients. So a democratic win could maintain a steady flow of IT spending as is, and whereas the Republican victory might lead to uncertainties due to potential anti-immigration policies affecting the hiring process. So especially there are chances that there may be limits that will be imposed on H1B visas that could totally impact all these IT companies. And of course, all these volatility either way are currently going through and will be short time. And of course, it all depends on how is the economy and job market, and if going to be in the next year or coming years, whether there will be IT boom or the bubble is going to be bust in the near future. So there is a lot of expectation whether there will be a recession in the year 2025. So we need to really wait and watch. However, for long term, for these companies are still very good as they are debt free and also having strong portfolios in terms of long term. But all these short term volatility can be a good reason to buy on dips. After IT, the next sector is pharma. The focus stocks are like Sun Pharma, Dr. Reddy, Cipla. These are like major pharma companies in India. So with Democrats historically supporting more favorable healthcare policies, pharma stocks may see increased investment if they win. However, a Republic win could lead to deregulation that might impact pricing and competition momentarily. So I always feel that for small investors, it's quite risky to invest in pharma sector because that goes through US FDA and other regulatory implications. So it's better we take a safer bet and also keep a very small portion in our portfolio instead of putting a lot of money into pharma in general. That's my personal opinion. Automobile is a next sector where we always feel that it is quite limited to India and why it can be impacted, but there are very specific reasons. So the focus stocks like Tata Motors, Mahindra & Mahindra and Maruti Suzuki. The reason is trade policies under democratic administration might favor electric vehicles and investments, so benefiting Indian automobile manufacturers with EV plants and exports. And conversely, Republicans may focus on deregulation and focus on more fuel-based vehicles, impacting the sector differently. Energy sector will also be in focus, where we have some stocks like Reliance, NTPC, Tata Power. So the reason is democratic win could bolster renewable energy investments due to policies favoring green energy. In contrast, Republican win might lead to increased fossil fuel and affecting companies aligned with renewable initiatives. Defense sector is the fifth one, where we have focus on several but highlighters on major companies like HAL and BL. So generally there is a reason that increased defense spending is often seen under Republican leadership, which could benefit Indian defense manufacturers through enhanced contracts and collaborations. So HAL, BEL, even for that matter Massdock or Cochin Shipyard will also be under focus. But currently whether if there is any focus on under democratic one, I do not think so. It is more specific to Indian defense sector and its growth. So from a long-term perspective, the defense sector will continue to grow as we see more budget allocated in India by Indian government. However, this can be partially impacted because our export in defense is quite less. We are quite indigenous in the recent time, and Make in India is really working well in this aspect. So there is a partial impact. However, for a long term, I do not think it is going to impact from US election perspective, but from India's continuous budget spending is going to be definitely influence these companies, and most of them are having very strong order book, and we can continue to keep them in our watch list or even portfolios. So the other sectors like consumer goods that have export focus, metal, steel, banking and financial service companies might have moderate impact due to policy changes and export related policies in particular. However, the Indian market is poised to recover quickly and will be resilient from this short-term volatility from my perspective. I am highly positive on Indian stock markets for long-term investments from 5 to 10 years time frame personally. So from my personal view, whether it is Kamala Harris or Donald Trump, whoever comes, there could be policy changes and there would be some bit of continued volatility in the global market, including Indian market. However, if for any reason there is a strong impact, particularly in the sectors that we discussed like IT and pharma, this could be a real nice opportunity to buy in all the dips, because Indian market is going to be quite resilient and we will definitely see recover quick and faster. So there is a real good reason to buy on every dip. Yes, you might have already heard the cracker sound. Wish you all a very happy and prosperous Deepavali. Happy investing, make real good wealth. Thank you for watching. Thank you for watching. Please click the like button if you find this video to be useful to you. Please subscribe if you have not subscribed. Share this video with your friends and relatives, and also share your feedback in the comment section.